I'm that person, I dump all my NDAO. Price would, you would think, drop. What exactly happens elsewhere to keep that equilibrium?
It's a great question. So any market-based currency is subject to the market, right? And a big enough hammer, a big enough chunk of sales that all happens at once is going to push the price down. The question is, how far does the price go down? How do people react to that going down? And how long does it stay down? And so what ndao is designed to do is to encourage people to look at a dip in the price like that as, oh, this is a temporary situation. Because you have all these economic mechanisms in effect, it makes you better off to be patient and to not panic. If you panic with ndao, you're not going to do as well as the people who hold. There's never a situation where it's a benefit to propagate a run on the bank, which is the problem with a lot of these kinds of currencies.
So what is in place to keep a run from happening?
Well, one, you've got, since you have this ability to lock ndao, many people's ndao, they bought it to hold for a period of time, and it's locked, so they can't sell. So that's one effect, right, is you don't get people rushing to sell just because it's temporarily dipped. They can't do it anyway, and they never intended to, right? They voluntarily chose that. Secondly, as the price dips in this kind of situation, you have to pay this extra fee, this stabilization incentive burn, and nobody wants to pay extra when they're selling and it's already dipped.
That incentive goes then to the other holders.
Yeah, what happens, the burn, it's actually burned. It's actually taking ndao out of circulation. So if you've got a supply and demand imbalance that's depressing the price, but you start drying up the supply, it brings it back more into balance. That's going to drive the price back up. So just simply be patient means that ndao is going to be removed from circulation and pull it back up.
Sure. So thinking about, some of the hurdles, headwinds, tailwinds that y'all might come up against, I heard something about it's sort of like a CD that makes me think interest rates, which makes me think potentially, this might be deemed some sort of security. How do you navigate the murky regulatory waters that is really hanging over this entire space?
Sure. So we don't view it as a security. We've had our attorneys check on all the rules, things like the Howey test, which determines whether it's a security. They're in touch with the regulatory authorities. We're prepared for if the rules about securities deem us a security, that's an okay thing too. We're prepared for that. But we're trying to create something that doesn't fit the normal classification of a security.
Mm-hmm. And that is sort of like, in a sense, a Fed coin, right? And so what's the long-term vision? What's the 5-year layout of what you guys hope to achieve?
Well, we're really trying to create characteristics of an entirely new kind of asset class that's not correlated with Bitcoin, Ethereum, and goes up and down the same as all of them, because they tend to go up and down altogether. We're trying to create something that can do well and is a flight to quality kind of asset that even in bad times, even if a black swan event happens, this is a place you can go and will do better than all the other alternatives, whether it's crypto or traditional.
And there's a sort of whole ecosystem built around it, right? With market makers and...
Yeah, the idea is to be as decentralized as possible. So when Kiran invested in Jim's company and set of entities, there's a whole bunch of different entities that all have various roles in a decentralized manner.
Yeah, I can speak.
Poor guy.
Someone doesn't want you. I can put this on. Maybe close your mouth.
There we go. Okay, now I can speak. Have to pay the electric bill. As Ken mentioned, what we're doing as a company is we've created an overall company that is called Onero. And under Onero, there are several companies built that kind of drive what Ken was saying. So we've built a market maker called Ntrade, and that will drive the market maker. They monitor the markets for ndao on the exchanges, etc. In addition to that, in the initial stages, we have a company called ndev. And ndev is primarily responsible for the development, the maintenance, the security, and all of the other things that are technically minded in the IP rights for ndao. And on the other side of it, we have a company called Ndichi. And Ndichi is where Ken mentioned where the endowment is put. So every time that ndao is sold, the proceeds from that purchase go into the endowment. And that's used by the market maker to drive the liquidity for the market when needed. And in addition to that is an operating company called Onero NA. That's a US-based company, and that's primarily the company that drives the marketing, the expansion, any of the growth, and all of the other items under the entire Onero Group umbrella that we've been tasked with to build out and put the ecosystem together for NDAO.
Sure. And so, looking at the backdrop, right? You know, when we think about what stable coins, the objective is to have something that I can go to the store and that the merchant will know that this is going to be worth X amount when I deposit it into my own bank account, right? Or wallet or whatever have you. Why is this something that is a better alternative? And what are some of the shortfalls? I mean, I'm sure there's something, right, that a stablecoin might achieve that's better than what ndao sets out to do.
Yeah, I think stablecoins certainly have their place, but from an investor perspective, we've looked at quite a number over the last 2 years, and when we met Ken and his team, we were very much taken by the fact that this wasn't just a stablecoin, it was so much more. And like as an investor, we've a fiduciary duty to our LPs to make investments that are not going to lose money. And we look at some stablecoins pegged to the dollar or gold, and they're not even going to beat inflation. So what we really liked about this platform was that, as Ken mentioned earlier, mitigated against downside volatility, but allowed for this steady upward growth. And as an investment firm, we really like that.
So as an investor, where do you see the future of stablecoins going? Will they have their place in the market next to an ndao, next to other cryptocurrencies?
Yeah, that's difficult to say. I mean, I think they have their place in the market currently. I think as ndao becomes more predominant in the market, I think what happened in August with Tether, for example, you may see ndao being that sweep coin. Because some of the use cases we're seeing currently, even in the private sale that has been conducted to date, and just over $15 million has been sold while it was in stealth mode. And what we're seeing is that a lot of entrepreneurs out there that raised a ton of money in Ether and Bitcoin in their ICOs are now looking at ndao, and we've in fact taken money from some of them already. They've purchased ndao, and they did it 2 and 3 months ago, and they're very thrilled that they did, given what's happened to Ether and Bitcoin in that period. So I think we're going to see a lot more of that, and then there are other use cases as well in terms of regular trading, where we see ndao potentially being the currency of choice for holding as you get into other maybe more speculative trades.
Mm-hmm. Do you think it could be sort of, Tether plays a huge role in other stablecoins as an off-ramp for trading firms to get in and out of positions quickly? Is this something that, are you guys talking with traditional prop shops, market-making firms as a way that they could use?
Yeah, we think that the stable coins are a good sweep coin, as they call it, right? When you want to get out of things and just get something stable, stable coins are good for short-term stability. So, and from a personal perspective, if you've got to pay your rent tomorrow and it's $1,000 a month, having $1,000 of a stable coin, you're going to be able to pay it, right? $1,000 of ndao. In a short run, it may not be worth that, right? It is going to be more volatile than a stable coin. It's not designed to do that. But if you're saving up for retirement or college expenses, or it's some kind of long-term savings, you're going to do better with a buoyant coin typically than a stable coin. So over the long run, it's a better choice for storing value.
And how do you sort of mitigate the risk of, we looked at Tether had the first mover advantage, and then tons of others came on the scene with Gemini, most recently alongside Paxos, announcing their intentions to launch a stablecoin. How do you keep your position in the market as a first mover and mitigate others from coming in and sort of doing the same thing or something similar?
Well, since we're the first buoyant coin, you're right. It's like, how do you defend your position once you've done that? And as we prove the model, and as people see it performing very differently than anything else out there, we expect there to be people to make alternative attempts at it. And it's a fairly complex new kind of category of coin. And we welcome that. We think there should be experimentation. One of the things that's also designed into it is really strong digital governance. And so the idea is, as more data comes out, as people try different approaches to this, and we learn what works better. The idea is the whole ndau ecosystem can have its digital governance go, aha, let's tune that knob here a little bit, let's tune that knob there, and everybody is better off. And so it can evolve over time and learn from the best of everybody that's doing experiments with long-term store of value.
The other thing as well is it might be seen as first mover in terms of buoyant currency, but I think we very much see it as second mover in terms of the whole industry, because Ken and the team, the ndau Collective, when they came to us originally and Onero was formed and we invested in the business, we really believed that they had thought about this from the economic perspective first rather than the technology perspective. And we found that was very unique in the industry, because anything else we had looked at was always technology first, economic second. They reversed that process. Now, don't get me wrong, there's very, very sound technology behind it and an incredible team, but that was one thing that really attracted us to ndau.
Sure. And so, going back to the regulatory question, right? If this is something that, in a sense, is a Fed coin, right, and replicates sort of what the central banks do in their monetary policy, what's to keep the Federal Reserve from doing something similar, and regulators giving you a hard time and maybe not giving you the clearance that you need to trade? If they deem this thing a security and people move it around, it could go from you all the way down the pipeline.
Well, security tokens are a thing, right? So there are plenty of tokens that they're not even trying to not be a security. They're happy to be a security. They're trading. You can be successful as a security token. So that's a fine outcome as well. You have a little more freedom to operate not being a security. That's how we're going. We are trying to also be the most regulatory friendly token out there. So we're trying to take the high ground across the board on all the issues that they care about most. If you are a regulatory agency, your job is to protect consumers, to protect people that are buying these things. If you are the one that's going out of your way the most to protect those people, that's not who you're trying to go after and say, hey, we need to do something about that. We're trying to be leaders in protecting the interests of the people that own ndau. And as far as central banks, we're also trying to be the friendliest central bank token. We hope to work in partnership with them and help them win in a lot of their goals as well. So we don't see ourselves in competition with them as much as potential partners.
So what are the conversations looking like with some of those entities, whether it's a central bank or specifically central banks? Are you talking with any?
Yeah, so far conversations are very friendly and they're very interested. We're really the only ones in the space with this kind of approach with very sound economics behind it. We've got some very qualified economists that are involved in the project and people who are very fluent in how central bankers think and how regulators think to try to basically preempt and meet the needs of what they're looking for in the first place.
What has hiring and building out the business and hiring, obviously there's a talent crunch in this industry. How do you overcome that hurdle?
So I think we have the challenges that every other company in the Boston area has. I've worked with other companies here too. But so far, I think the key thing for us is we have a pretty unique solution, a unique approach. We've been able to attract a lot of people that have the skill set that we want to develop. And in addition, because the companies that we've formed are separate, each manager or each CEO of those companies is working to drive their own teams. They have their networks, they're going out and looking. I'm doing the same on certain areas that I'm covering directly. And I think we've been pretty successful at that. And that, I think, will be the push for success, and keep that decentralization in terms of the hiring, keep the skill sets in the areas where they need, and that allows the management focus so they can build the teams they want to build.
And having that in place will lead to the success you want. What to you is success in a year from now?
Adoption, controlled adoption. I think that's the primary area where I look at it, is that we can get ndau into the market, to talk to all the points that Ken and Kiran were saying in terms of being able to have people recognize it.
I think the thing that I'm most looking forward to is one of the next steps we'll be taking is to get ndau actually on exchanges. And we can run all the economic simulations we want, right, about these buoyancy properties, but the proof is in the pudding, right? So to see it on exchanges, to see the stability, to see how it performs over time, that's what we're most looking forward to, because that validates all the work that's been done, all the simulations, all the testing and so far that have been done. You don't know for sure till you see it out there, and so that's probably the most exciting next part.
And we shall see. Thank you very much for listening in. And thank you, gentlemen, for your time on the panel.
Thank you, Tim.
Thank you.